Tuesday, April 7th, 2026. Like and subscribe. The $1 Investor. iShares MSCI India ETF. Full breakdown. INDA. What this fund is. The iShares MSCI India ETF is an exchange-traded fund that invests in large and medium-sized companies in the country of India. The fund tracks the MSCI India Index, which represents about 85% of the Indian stock market. This fund started in the year 2012. The fund owns about 174 companies. The yearly expense ratio is about 0.61% per year. The dividend yield is about 1.2% per year. This fund is managed by BlackRock, which is one of the largest investment companies in the world. What companies are inside the fund? The largest companies inside this fund include HDFC Bank, Reliance Industries, ICICI Bank, Infosys, Bharti Airtel, Mahindra and Mahindra, Larsen and Toubro, Axis Bank, Bajaj Finance. This means the fund is heavily invested in banks, energy companies, technology companies, construction companies, and communication companies. Sector breakdown. The fund is invested in the following sectors: financial services about 28%, consumer cyclical about 12%, energy about 9%, industrials about 9%, technology about 9%, basic materials about 8%, healthcare about 6%, consumer defensive about 6%, communication services about 5%, utilities about 4%. The largest part of this fund is banks and financial companies. Their performance over the last 5 years. Over the last 5 years, this fund returned about 50% total. That equals about 6% to 8% per year on average. The fund did go down during the COVID crash and lost about 34% at one point, but then it recovered. Since the fund started in 2012, the average return has been about 6.5% per year. This fund grows slower than the S&P 500, but it is a long-term growth investment because India is a developing country with a fast-growing economy. What Wall Street and professional analysts think. Most Wall Street analysts rate this fund as a moderate buy. There are over 100 buy ratings, about 50 hold ratings, and only a few sell ratings. The average price target from analysts is about $59 per share over time. Large investment companies believe emerging markets like India could return about 8% per year over the next 5 years. India is one of the fastest growing major economies in the world, growing about 6% to 7% per year. This is why many professional investors include India in their long-term portfolios. Risks of this fund. This fund does have risks. The risks include currency risk between the US dollar and the Indian rupee, political risk in India, emerging market volatility. Sometimes it underperforms the US stock market. Global events and trade issues can affect emerging markets more. This is not a safe fund like the S&P 500. This is a growth country investment. What this fund might do over the next 5 years. Based on analyst forecasts and economic growth, low estimate return is about 3% per year. Average estimate return is about 6% to 8% per year. High growth estimate return is about 10% per year. This investment is best for long-term investing, not short-term trading. My $1 per day investment plan. I'm investing $1 per day. That equals $365 per year. In 5 years, I will invest $1,825. In 10 years, I will invest $3,650. In 20 years, I will invest $7,300. In 30 years, I will invest $10,950. If the investment grows at about 7% per year, this is what it could grow to. After 5 years, about $2,150. After 10 years, about $5,100. After 20 years, about $15,900. After 30 years, about $34,000. This is the power of compounding and consistency. Final summary. In simple words, this fund is a long-term investment in the country of India. India is growing fast. India has a young population. India is building cities, technology, banks, and infrastructure. India could become one of the largest economies in the world over the next 20 to 30 years. This fund invests mostly in banks, energy, technology, and construction companies in India. Over the last 5 years, the fund returned about 6% to 8% per year. Over the next 5 years, professionals believe it could return about 6% to 8% per year on average. This fund is not meant to make you rich quickly. This fund is meant for slow, long-term growth. My plan of investing $1 per day is a long-term wealth-building strategy. $1 per day may not seem like a lot, but over time, with compounding, it can turn into tens of thousands of dollars. This is called disciplined investing. This is called long-term investing. This is how wealth is built slowly. I'm not gambling. I'm investing in the growth of a country. And that is a powerful strategy if I stay consistent for many years. My plan is simple. $1 per day, every day, no matter what the market does. I am not chasing hype. I am building wealth slowly. This is my journey. This is my discipline. This is my future. Like and subscribe. The $1 Investor.